right, I think we are live. So, hi everybody. Welcome to today's parent meeting. Today, we're going to be talking about understanding your financial aid award. My name is Armando Bustos. If we have not met, I'm the director of the program, and I want to welcome our new families. We've been recruiting recently, and so our new families were invited. So, I want to welcome you all to today's meeting. Um, it should be insightful whether you're in ninth grade or 12th grade. There's a lot of information to take away from this presentation. This will be saved on YouTube. So again, we encourage you all to watch it again or even share it with those in your community that you think will benefit from understanding financial aid. I know we've talked about financial aid a few times this year because we know it's important, but today we'll really spend some time talking about how does it actually work in reality once you apply to college, once you get your acceptances, and then once you get the financial aid awards from the universities. There's a whole process in helping understand all the different definitions and terms, and unfortunately they all look different. So we'll talk about a little bit about all these things, but again, I want to welcome you all for being here today, taking time out of your evening to be part of today's session. And so we're going to kind of split up our presentation to about three parts. We'll kind of summarize some basic financial aid terms and concepts. We'll show you some examples, which is really neat, of different financial aid packages and how to read them. And then lastly, we have a tool that we developed as a program to help you as a parent and students compare the different colleges you've been accepted to and how much they're going to cost. And so we'll revisit that tool so that then that way we can share that with each student individually and that you all can talk about it over as a family. So without further ado, I'll hand it over to Ms. O'Neill, who will get us started.
You're welcome. So we're here to talk about probably the most exciting and nerve-wracking part of the college journey, which is how to afford it. And so for our seniors who are at this point in the process, they have gotten their acceptances from their schools and also some emails and some awards of free money and some loaned money, and they're trying to decide that. And this is a point that you reach when you're applying to college, where you're kind of looking at what are your financial options, what are the best options for you, and they use a lot of really specific language. And so we're kind of here to talk about that. But to get the free money, the most important thing is that students submit a FAFSA or a free application for federal student aid. And so once the students submit that FAFSA, it opens October 1st of every year. You would apply every year that you anticipate being in college the next. So for our seniors, they apply for their freshman year, and so on and so forth. You'll receive a financial aid award letter around this time, at least by April 1st, from each school that you've been accepted to. So once they've been accepted to those schools, FAFSA will send them, hey, these students are eligible for this much money, and then you can look at each school what money they give you for that, be it in free money, which is grants and scholarships, or loaned money, which is loans. Your letters show what financial aid is available to you for the upcoming year. So for our seniors this year, that would be the next academic year of 2021-2022. So they'll be able to see the cost of the institution, fees, all that fun kind of like, what does it cost? And they'll see how much they got in terms of free money and loan money. Each school might have a different format for financial aid awards. In fact, there is no unity even amongst associated schools. So if you look at the CSU system, which has 23 schools, each one has kind of a different taste or kind of perspective on how they do their financial aid award letter, even though they are all California State Universities. Same with the CSU or UCs, which is the University of California school system, of which there are 9. So let's kind of demystify some of the language that kind of come with the territory. So when you apply for FAFSA, and again, that opens October 1st, and priority deadline for FAFSA is by March 2nd. So the students need to get it in by March 2nd to be considered eligible for aid. They're going to give you a number called an EFC. And this is your expected family contribution. This is the number that colleges, FAFSA, everyone kind of uses to determine financial aid eligibility. So based on the financial information that you as a parent and family provide to FAFSA, they will say you're expected to give X amount of money towards your child's education. Even if you're expected, that doesn't mean that you have to or that that's even feasible, but that's just what the government and the school system think is reasonable. The EFC can be found in your FAFSA confirmation email, and it's something that they send out to the schools, and the schools will take that and kind of assess our tuition is this much. So you can get more free money depending on the type of institution you go to. There are more expensive institutions and less expensive institutions. An example for that is the CSU is typically about $500 per unit um, per class. And so a community college is $46 per unit per class. So you can kind of see that there's a discrepancy there. If you attend a pricier institution with a low EFC, you're more likely to get more free aid versus attending a less costly option. You still would be eligible for free aid, but you would receive less of it because the institution itself costs less, if that makes sense. And so when we're looking at the cost of attendance or the sticker price of attendance, this is the price that the schools will say costs this much to attend. That's not what students actually end up paying. They pay something called net price, but we'll get into that. So the sticker price is an estimate of what you can expect to pay for tuition, for fees, for room, for board, books, and supplies. Tuition is a fixed cost. So the tuition of the university doesn't change. It doesn't change based on the classes that you take. It's going to be the same. That one you can expect that won't change, but you'll be getting either free or loan money to help with that expense. What can change and what is kind of a estimated cost would be the books, the supplies, the personal expenses, and the room and board. So if you're not boarding with these institutions, if you're not going to live on campus or eat on campus, then you can kind of disregard that. But if you are, they'll give you an estimate of kind of like their most middle options. So a middle meal plan and a middle housing plan. There are, of course, more expensive options, so it can end up costing more than the estimated sticker price, and there are less expensive options, so then you can save a little bit of money. For the books, it really depends on the classes and the routes that you take. There are way cheaper options in terms of renting books, buying used books, going to the library and reading there, looking online. There's ways to cut down these costs and personal expenses, which are just costs associated with living on Earth, like toothpaste and shampoo. You have to have those expenses regardless if you are in college or not. And so that might be factored into their sticker cost, but not necessarily what you'd be paying. The only thing that's a given, that's the correct amount that will be paid for somehow, even if it's grant aid, gift aid, scholarship, or loaned money, is that price of tuition because that doesn't change. So the net price, and this is the cost of attendance, the net price is the price that you pay after financial aid is applied. Think of it like after that discount, if you're going to go check out and you go, okay, it's going to cost this much, but then you put in a coupon code and then it costs less money. That's the net price, what people end up paying after the cost of aid. But sometimes, and quite frequently, it does happen to our students where they get more gift aid than the cost of tuition, and they actually end up getting paid to go to their college institution, which is a great thing. Think of this as the price after the discount. So as you kind of go through, you owe the college this much in tuition. Once the gift aid is applied, if there's even more gift aid, the remainder will go into the student's direct deposit or bank account, which is a great thing that they can use towards some of those estimated fees, like their books or cost of living. So I've been talking a little bit about the different types of aid, and I just want to touch on what they are. Grants. Grants are free money provided through FAFSA, the state, or the university. So when you apply to FAFSA, it's a one-stop fits all. It gives you federal aid, access to things like federal Pell Grant. It gives you state aid. So if you're going to go to California, it can give you access to the middle class scholarship, California state grants, or university aid if you're going to get a university grant. So one application and it kind of enters you into three pools of money for potential free money. Scholarships are also free money. It's money that's applied for one time, or a scholarship can be annually recurring, which means you apply for it once, and then every year that you're in that college, you will get that scholarship from that amount. It's important to differentiate when you're looking at financial aid awards if you have a one-time scholarship versus an annually recurring scholarship, because that means that you might pay less one year and more other years if it's not a scholarship that reoccurs every year. Federal student loans, this is money that you have to pay back over time and it earns interest over time. So this is money that is loaned and will earn interest. And then work study is the last way that you can really afford it. And it's money that you earn from working at the college in a work study position. So there's free money and then money that you either work for or that you are loaned and it gains interest over time. So grants are need-based money without repayment. Scholarships can be merit-based, performance-based, just basically maybe you applied and they liked your application and it's free money. Work study is need-based on campus earnings that paid directly as student wages. So then that's their money to spend how they like. Federal student loans, they're fixed at a low interest rate and it's money that has to be repaid. So examples of grants. There's Pell Grant, which is one of the highest grants that students can get. Cal Grant, which they get based on how good their GPA is. So you can get awarded this if you have a good GPA and you go to school in California and you graduate from that high school. State University Grant, which is offered through the state and the university. The Student Support Services Grant is another option, and there's actually many more. So you can look at your students' financial aid award when that time comes and kind of look at the different options of what they've gotten in terms of grant or free money. Then there's loans. There's three types of loans: subsidized, unsubsidized, and the Parent Plus loan. Also a private loan that you can get through the bank as well, and that is borrowed money. So when we talk about loans, I'm going to focus in on the three major ones. The first one is subsidized loans. Subsidized loans are subsidized by the Department of Education. So they will not accrue any interest while your student is in college. So for the duration of their time in college, even though that they've borrowed that money, it will not accrue interest. And in fact, it also comes with a 6-month grace period. So after they graduate from college, there'll be 6 months while typically students find jobs, that money also does not accrue interest. After that 6 months, there will be an accruement on interest of the whole loan. So we recommend that if students need to take out loans to cover the cost of room or board or their tuition, or for whatever reason, that they start looking at subsidized loans first, because these do not accrue interest immediately. Whereas unsubsidized loans start accruing interest immediately. They're available to graduate and undergraduate students. So not just in your 4 years of your bachelor's program, but later on. And they do accrue interest throughout. And then last but not least, there is a Parent Plus loan, which takes on the parents as a borrower as well as the students. It's not always something that we recommend. We really recommend starting with a subsidized loan because it ties the parents' credit to the student's credit, and the parents are now responsible in paying back that loan for the student's education. It's not usually a recommendation that we have, but in certain cases, it can make sense. So here's some key terms to learn in terms of loans. Deferment, You may not be responsible for paying the interest if you defer on your loans. If you physically cannot pay them back, this is an option. You have to go through the Department of Ed and as you kind of pay it back. It accrues on certain types of loans during the deferment period. Forbearance on your loan payments are postponed or reduced interest, but it continues to accrue during that period of forbearance. And so that's for the unsubsidized loans. And then a grace period, like I talked about, is that 6 months after you graduate, is that grace period, is a set length of time after the date in which the payment may be made without that incurrence of interest. So let's talk more about free and earned money because that's the best kind. So scholarships or a grant payment are made to support your education. They're awarded on the basis of academic or other achievement. It might even just be that you are walking, I know like Kohl's has a scholarship, and if you just apply to that scholarship as a customer, it's a random selection and you can get that scholarship. So it doesn't even need to be necessarily grade based or athletic ability based or merit based in any way, shape, or form, but it could just be that you're a customer at a store. Work study is a program which you earn money and kind of are hired through the school. It's not guaranteed and it might show up on your students' financial aid. Yes, they've been accepted for work study, and that's great and that's really exciting, but they do need to get hired at the university in a work study job. So it's not guaranteed, even though it shows up on that aid report. So here's a few kind of letter reading tips when we get these letters. And again, they all look unique depending on the university. Your award letter covers 1 year only. So it will cover for our now seniors the academic year of 2021-2022. You'll need to fill out the FAFSA and reapply for financial aid every year that you plan on being in school. Make sure to compare your award aids, so based on each school that you're accepted in, and see what makes the most sense given the cost and fees of each school. So you can look and say, okay, I got accepted to this school and this school. How much aid are they giving me? Because it will not be uniform based on each school. Start looking at the grants and scholarships and the free money first. We always want to take the free money first. Then look at the loan offers. And if you are going to accept loans, start with the subsidized first and then determine what makes sense given your financial situation. So here's an example of an award letter, and I'll kind of talk about the different parts of it. So this student was awarded the federal Pell Grant, the Supplemental Education Opportunity Grant, Cal Grant B, and Cal Grant B Access, which is a new kind of form for students that are parents. So this is all free money. So for this student, they're able to accept that $5,296 in the Pell Grant, $500 for the Educational Opportunity Grant, $5,000 for their Cal Grant B, and an additional $6,000 for that Cal Grant B Access. So this is all free money that will go towards their tuition. Then we can see clear as day the loan. And so they have a subsidized one loan that they are being offered. It doesn't mean that they have to take it. It does mean that they are being offered it. So that amount is about $4,934. Then the student has earned additional free money in terms of a scholarship, the Mary Stuart Rogers Scholarship, and the Student Support Services Award, which is $650. So in terms of what they are offered, it amounts to $27,000 for that academic year. But the student has decided to accept all their free money and not accept the loan. And that amounts to $22,000 in free money to go to school that year. Even if this is more than the cost of tuition, that money will go directly into that student's direct deposit. They can use it to cover personal expenses, books, room and board, all the other kind of living expenses that are associated with just being a college student. So here's another breakdown. When we look at the award, we can really, I like to start looking at the category. So the student has won 5 off-campus scholarships, and so that's all free money, and they have about 5 grants here. So they've won the federal Pell Grant, the State University Grant, the Educational Opportunity Program, and all of these grants they got just based on applying to FAFSA and their grades as a high school student. Cal Grant B is one of those examples. And so when we look at this, they've gotten $20,000 towards their education. And that is all free money. And here's another example. We're just throwing them all at you because each one looks a little bit different. So they take time to read. But if you ever need help, please reach out to us. We're happy to help our students kind of walk through it. And Mr. Bustos will shortly show you that tool to kind of compare each offer, because again, it looks a little confusing when they don't look the same. So to put all the information in and see everything compared on the same playing field can make it much easier to make those decisions and see what each university is offering you. So for this one, the student won the State University Grant. They won that federal work study. However, it's not guaranteed until they're hired in that position. So it's always a nice thing to keep in the back of your mind, like this is a great option for the student when they get to campus, but it's not a guarantee. They also were awarded a direct loan. However, they don't have to take that loan. Just to be awarded it, it's nice to know that that's an option, but you really need to look at your finances and see if that's something that you want to accept or decline. So you can look at and see in terms of the past kind of awardances that they got. They've won the State University grant, free money, good. Work study was offered, and then the 2 loans. And you can kind of see how each financial aid award package looks a little bit different. So I will hand it back over to Mr. Bustos to talk about the cost of comparison tool and kind of walk you through what that looks like.
Hi, everyone, and there's some just questions in the chat that I want to address before we kind of move on. And so our one of the question is, so if we fill out the FAFSA every year for aid, whose income do we put on the application after you graduate? So as a student who's filling out the FAFSA application, you will be using your parent or guardian's tax information until you are determined to be an independent student, which will typically be, if I remember all of them correctly, age 25, have a child of your own, and I think there might be a few more, but those are some of the determining factors that will classify you as an independent student, and then you will use your own income. So that's a great question to ask. The Cal Grant is for 4 years of being enrolled in school, be it 8 semesters or 12 quarters. The Pell Grant, which is the federal financial aid, you're eligible for up to six years. So it's important about managing the different loans, grant options to make sure that you can maximize on them as best you can. Let me see. So expected family contribution is kind of a calculation that the Department of Education uses to calculate how much they expect the family can contribute. They don't always explicitly kind of have a formula out there. There is a tool, I believe, on the student aid website. I'll see if maybe Miss O'Neill can find it and send it to me so I can put it in the chat as well. But we'll find that for you. And then the next question, so expected family contribution, they're going to be changing the term actually in about a year or so. So it'll look a little different. But again, it's an estimate of what they think your family can contribute. Is it accurate? That's debatable, but that's what they use determine how much aid you can receive. And in what cases would you decline a loan or a grant? In most cases, you will never decline a grant, except if you're choosing to go to community college. There is other aid specifically for community college. And so you may save your Cal Grant for when you transfer to a UC or Cal State or private school, so you can maximize on the number of years you can use your Cal Grant. So it's like a deferment process. A lot of students in the community college will do that. And so that may be one reason why you might decline a Cal Grant, so you can keep those 4 years of eligibility. A reason why you might decline a loan is you just don't want to take out that loan and owe debt, take out a loan and really have the interest accrue and all that. There's also some loans that we typically don't recommend, like the Parent Plus loan is one that we try to really shy away from, just because that loan is taken out by the parent and then the parent is responsible for paying that loan back. Again, those are all conversations you would have as a family, but that would be something that we would recommend, or even if you don't need the loan. So we'll get into some examples of an instance where you don't need a loan, and so if all your costs are covered, then why take out those $2,000 to $3,000 a year or even more to cover your costs? And Miss O'Neill put it in the chat, on our chat. So if you want to estimate your financial aid packages, you can use this tool. I'm going to put it in our comments. And then also College Board also has a great tool to help you kind of navigate the college, paying for college, or even estimating the cost for different schools. So we encourage you to use those resources. Great questions, and these will help you really navigate and start talking about how you're going to potentially pay for college. So I'm going to share my screen, and pardon me if I look away because my screen is over here that I'm sharing, so I may not look at you directly. There's a lot of great questions. So again, please continue to ask those. Is there a way of knowing which universities decrease their financial aid support to students as they continue their education? Maybe we can sometimes share by example or just experience. Typically what we do is if we see a scholarship that isn't a Cal Grant or anything like that, we'll either email or call the school and say, hey, is this scholarship, is this financial aid package going to be consistent every year? Sometimes you can even search the name of the scholarship they get on their school website, and it'll give us the qualities or characteristics of that grant. And sometimes it'll specifically say for first-year students. And so then that's the case. We have a conversation with that financial aid office at the school. Ms. Sonia has a lot of examples of approaching schools, and they'll kind of adjust your financial aid package if you kind of go in and say, hey, this scholarship you offered me is only renewable for 1 year. What can you guarantee that you'll offer me in the future? So again, those are some of the examples that we have. Yeah, so exactly like you mentioned, University of I think University of Laverne or Las Vegas, I'm not sure which one, has some scholarships that they offer for first and second years, but maybe not others. And so again, we try to have those conversations early on, and we'll definitely help your students either email or call the financial aid office at those schools. You do want to think about funding your education as a long-term process, not a short-term 1 year kind of decision. And so one of the tools we have, and you'll see it on my screen, is we call it a cost of attendance comparison sheet. So this is a tool that we've developed in-house, so it's by no means perfect, but we've developed it in a way where you can easily compare a bunch of different schools at the same time. So and we'll be preparing these and sending these out to our seniors so that they can start having those conversations once they start getting their financial aid packages. And so we want to talk about this today so that you as parents, guardians, understand all these different terms, understand what these look like, and in the future, you kind of understand what these are as well. And so on the front, it's kind of a cover sheet of all the schools that a student might have been accepted to or has received financial aid packages. And so I don't want to get into all this yet. I want to kind of talk about what it might look like at a specific school. And so these are some samples that we've gotten from some of our different students. And so I'm just going to quickly talk about UC Berkeley. And so last year, the tuition at UC Berkeley was $12,570, right? In the examples that Ms. O'Neill had on her screen, they talk about university fees, books and supplies, transportation, personal expenses, loan fees, and room and board. I always like to talk, when we first start talking about how do you pay for college, I want to always look at what's the minimum we have to pay, what's the most essential things we have to pay. And that's tuition and housing if you're deciding to live on campus. So that's why tuition is here. If you go in, let me zoom in a little bit to make it a little bit easier on our screen. The next thing we have is university fees. Some of these things are things you have to pay for. It can be for the gym or other services on the campus that they may offer, student fees for student life. Those are required, so we have those as yes. We have here books and supplies. I've checked off no, meaning we're not going to use it to calculate how much financial aid we need because it's not an essential and there's always cheaper ways to find books, even sometimes free ways to find books. So we'll remove it for now. Transportation, again, these are all the costs that the school thinks you're going to need. This person is living on campus, so they're estimating you're going to need $590 to provide some sort of transportation when you're living at UC Berkeley. We're going to take that off. We're going to hopefully pay some of these things off with an on-campus job or job. Personal expenses, again, I say no. I always don't include that in our initial calculations because, again, personal costs are all the things you need to live, clothes beyond food and someplace to live. So this is like clothes, going out to eat maybe, toiletries. And I always joke with students that you already have clothes. Maybe you take a bottle of shampoo from home and that'll get you through your first month or so at college. And then you can maybe pay for some of these things once you get a job. And then I want to talk about room and board. Room and board is a huge thing to consider when you're going to live on campus. Costs will vary from university to university. And when you receive a financial aid package, they're giving you an average of what it costs to live and eat on a college campus. So keep that in mind. What we do in our tool, and so they might estimate room and board is going to be $1,800, $18,000. But in actuality, the cheapest option may be $15,000. So how we do that is so you would get these from your financial aid package. It will give you a list of all the different options and all the different things that get added into your cost of attendance. And so then we have an option here where we can list out the different housing options. And so in our example, we're living in a triple, which will mean 3 people living in one room. Because it's the cheapest option and we want to lower our cost. And then for meal plans, these will vary based on the number of meals you can receive in a week, how much money you can spend in campus dining halls or on the grocery stores on campus. And so because we're picking the cheapest plan, which typically doesn't include meals on weekends, but each school is different. And so that's the 5,300. So that'll total up our room and board cost to $15,775. So total to go to UC Berkeley, we're estimating it's going to cost $30,000. That sounds like a lot of money. That's a car. That's a down payment. That's a really big vacation. But again, we haven't looked at financial aid yet. And so this is where really our tool is kind of a powerful tool because here we can list all the different financial aid packages, all the different financial aid options a student gets. So in section 3, we'll list all the free money a student gets. So these are the Berkeley Undergraduate Scholarship, the New Student Grant, the Cal Grant A and the Cal Grant and the Federal Pell Grant. All these free aid totals up to $24,000. So the $30,000 doesn't seem so far-fetched anymore, right? And so we subtract the $24,000 based on what we need to go to school. And that comes out to about $5,000 that we still owe. So from $30,000 to $5,000, it's a pretty significant difference. And so then now we can start considering loans. And so in our example, our student is planning on accept 2 different loans. So we have listed all the different loans that they had been offered. So subsidized loan, unsubsidized, the Berkeley loan, which is a subsidized loan, Parent Plus loan, and a work study. So the student is accepting the subsidized loan because those interest rates aren't accrued until after you graduate. We're saying no to the unsubsidized loan. We're saying yes to the Berkeley loan. We're saying no to Parent Plus loan. And then I have the work study here listed as no. And I want to explain that because when it comes to work study, like Ms. O'Neill mentioned, you don't get that money up front. All these different financial aid awards, you get at the beginning of the semester in lump sums. Work study, you actually have to work for it. And so I list it here so we know we have it, but I don't include it into our aid because you may not find that job on campus. You may decide not to work on a campus job because you have another job somewhere else. So do you have to pay off all the costs at once with loans and grants, or can you get a job to pay off any themed grants? It's perfect. So so typically, and we'll get into this, I can get into this in a bit. So let me finish up this section. So after loans, the student accepted $5,000 in loans. So after loans, we're estimating that they're going to owe about $16, right? And so that's not too bad. You can maybe get a summer job and cover some of these costs. If you choose not to get loans, you can make up the difference with out-of-pocket money. Maybe you have a savings account. Maybe you have funds from maybe a gift from somebody. And so typically your tuition and all your costs are due, well, tuition is paid on different plans. Typically it's on a semester plan or quarter plan. So at the beginning of each semester, you'll have to kind of cover your tuition. So financial aid will first pay everything. And then if you have anything that you are short, then you will either have to pay it with a loan or you'll have to pay it out of pocket. And so sometimes you can work a deal where you do monthly payment plans for some things. I know housing typically can do a monthly payment plan for your housing and for your meal plan. For tuition, typically it is upfront at the beginning of each semester. So essentially all these numbers will be divided by 2, and you'll get half of it first semester, half of it second semester. So that's a really great question. And so this is kind of our package that we received. We have a summary field up here where your balance after all your scholarships and grants is $5,000. After you take out your loans, your projected balance is $16. And so we use that so that you can kind of plan. So we go in and do these, maybe not for all the schools you've applied to, but maybe for your top choices. And then we have a comparison sheet where you can kind of compare them on equal footing. And so we see that we just have some examples here, like Smith Upper Bound University, $82,000. But maybe you get a bunch of financial aid, and so the $82,000 turns into $17,000 after all your free money. But you take out some loans and you still owe $13,000. So that may not be a good option for you. Conveniently, there are some color coding here, which is in this column. This is the one you may want to look at first. This is the balance you would potentially owe on your school, for your school, after all your scholarships and grants. So this is after all your free money that you don't have to pay back. So for this student, the 3 lowest cost of schools were UC Berkeley, UC Riverside, and Cal Poly Pomona. Cal Poly, and some of these costs are really driven by commuting. As you saw, living on a campus can range from $12,000 to $20,000. So that is a huge cost. So you do save a lot of money by commuting because you may not pay $15,000 in gas. You'll probably have to pay some in gas, but you'll probably also have to pay $200 to $300, maybe even more in parking when you live on a college camp, when you commute to a college campus. So in this case here, because they're living on campus, tuition is only $7,000, and they're getting Cal Grant and Pell Grant, which exceed the $7,000. So they are getting a surplus of money. So if they didn't want to pay anything and actually get some money back, Cal Poly Pomona would be a great choice. So here's how we can kind of compare after we only take into account our free money, because we may want to make a decision based on how we're going to limit the loans we need to take out. And so in column F, as our second column we want to look at. And this column is what is your remaining balance, right? If you're paying tuition and you're paying housing, only the essentials, and you've taken out some loans, what is your projected amount that you would have to pay? And so in this example, UC Berkeley, again, ended up being a good choice. UC Riverside and Cal Poly Pomona, because again, in Cal Poly Pomona, we didn't have to take out any loans, and so we were able to kind of save some costs. There are some other schools that maybe we didn't take out all the loans that we could, because we did not choose to do unsubsidized loans or Parent Plus loans. So like potentially UC San Diego, we can probably get that down to 0 in terms of how much you may owe, but we probably opted not to do those unsubsidized loans because those are going to start accruing interest. And these are all decisions that you make as a family, as a student, as a parent or guardian, a conversation that we want you to have. Because we know financing your education is a stressful thing. I know I took out loans to pay off my undergrad degree. I went to UCLA, so I did take out about $5,000-ish a year to live in the dorms because I was living on campus. And for some people, it may be that they're okay with that, and for other families, other students, that may be the thing you're avoiding at all costs. And so this will help you kind of compare all the schools at a glance, especially because all the schools list out their financial aid packages a lot differently. They don't all look the same. And so this is kind of our tool that we'll have. We'll start kind of sharing these with our seniors this week and next week, because the decision deadline for students is May 1st. And so we want to make sure that you all have the information you need to make that decision. We don't expect you to populate this on your own. Definitely make an appointment with us. We'll help you populate it. We'll help you talk it through. If you want to have a meeting with us, parents, guardians, we're happy to help you explain some of these different things that you may see on a financial aid package. And if you're 9th, 10th, and 11th grade, this is a perfect thing to start looking at now. Start thinking about, knowing that you will be able to get these different types of aids, like either it's free money or money you have to pay back as part of how you're going to pay for school. Again, some private schools may have a lot of free money scholarships to give out, so those may bring the cost down. Some private schools may not, but then even a public school may be out of reach in terms of financial aid because of either living on campus or Pell Grant eligibility or Cal Grant eligibility. So we just want to make sure that you all are informed as parents and as students. So hopefully this wasn't too confusing. We can get into different examples, but I know for the sake of time, I'll kind of stop there, but we'll share these with your students so that y'all can kind of mess with them, and we'll maybe even practice in the next year or even with how to use some of this tool. So I'll hand it over to Ms. O'Neill to kind of wrap us up.
Okay. And so there's different decisions that go into it. It's looking at what your students offered. The best advice we can give is to don't panic, to know that we're here to help, and to try your best to keep your grades up, look at scholarship options. I know loans can be really daunting and really scary, and we definitely do need to have like conversations about that, and we're happy to have that with you as a family, with your student, but it shouldn't be something that makes education unreachable. And especially with the subsidized loans, sometimes you can take out that loan, and if the amount's not too much, you can work during the summer and pay off the loan and then take off the loan next year. And I've known plenty of students that have done that just to cover like housing expenses. So if they take out a loan for $2,000, they work over the summer, then they pay off that loan, and then they take out another one for next summer, and they'll graduate debt free, no interest paid, even though they took out loans. It's entirely possible. And it's important with that tool and with our seniors to look at the options, to kind of plan around what their life will look like, what kind of meal plan they like. If they want to cook for themselves and they're not a fan of campus dining, then they can definitely go with the cheapest option. If they are like, this is the best food I've ever had, I want to eat in the dining halls all the time, they can go with a more expensive option and choose not to eat off campus. There's a lot of different factors to kind of look at. And don't rule out work study, but just know that it's not 100% guarantee. But sometimes work study jobs are amazing and they're great. Other times you might find an on-campus job that pays even more than the work study job, and you might take that and look at your options and weigh, does it make more sense for me to do the work study job, or does it make more sense for me to take the on-campus job? And
I do want to add, so I lived on campus for 3 years. So I graduated in 5 years. And so my last 2 years, I did decide to live off campus. And that reduced the cost of housing because I got an apartment. I had to sign a lease, so you have to go through all that process like you would with any apartment. But the costs were significantly lower. I did share an apartment with a bunch of roommates, and I had to cook for myself and all that. But that did save some of my costs by last 2 years. And so if you live around a college campus, there's typically a lot of apartments for students. Some won't have a 9-month lease and not a 12-month lease to kind of help with students out. But again, there's always ways to kind of minimize the cost as best you can. And so, yes, we don't share all the numbers to kind of freak you out. That's not what it's intended to. It's definitely to educate and then hopefully help you make a strong decision, and hopefully make informed decisions that you kind of know what you're getting yourself into long run if you're taking out loans. And there are some loan repayment plans to help. You can even calculate how much you'll pay a month with a generic kind of average, based on a different type of plan that you kind of work in. And so again, not to scare you, but to educate and inform and equip you to look at all the numbers that the schools throw out at you.
And just know whatever financial aid awards that your student gets and acceptances and kind of scholarship opportunities, they're going to be unique and tailored to the student. So even though we share these examples, it changes from student to student, case to case, offer to offer. And sometimes even with private schools, their first offer can be their first offer and not the final offer. I've known people that have gone into financial aid offices and been like, so what are you going to offer me because this won't work? And they walked out with a full ride. So there are different options. That's not always the case, but I think that's happened to one person that I know. So don't fret too much. Just know that college is affordable and there's a lot of free aid out there, and you get aid just for keeping your grades up. So that's what Cal Grant is. And for the student for Berkeley, it was $12,000 a year for 4 years for keeping her grades up. So that's a great example. If you need any help or if you have any questions, please feel free to reach out to us. I have put my email up there. I'm happy to share my phone number as well. It's 626-603-5628. You can call us or text us. We're here and available to kind of talk about these different things. We know it's daunting, but doable. So please don't worry, and thank you for your time tonight.
Yeah, thank you for your time. And to answer that last question, I think the average graduation is 4.5 years. If you're going straight into a 4-year institution, a lot of schools now are getting extra money to make sure students graduate in 4 years. And so there's a lot of programs you can sign up for called like the 4-year promise, or all these different kind of names, catchy names. So look out for those. They typically give you some incentives like priority registration to be in that program, follow specific sequence of classes, and graduate within 4 years. So yeah. So again, if you have questions, email Ms. O'Neill. You have my email as well by emailing y'all. So feel free to reach out if you have any question whatsoever, text or email. We're happy to help. All right, so thank you all very much and have a great rest of your day, evening. Bye, everybody.
Bye.